Imagine escaping your country, new job, new home, new life, 10,000 kilometers away. You did everything right. You left. And every single year for the rest of your life, your old country still sends you a tax bill. This is not a hypothetical. This is the law for over 9 million people right now. Only 2 countries on Earth do this. One is Eritrea. The other is the United States of America. And here's the part almost nobody knows. Some people caught in this trap have never lived in America at all. Almost every country on the planet taxes you based on where you live. Move away, establish residence somewhere else, and after a clean break, your old tax office lets you go. That's called residence-based taxation. It's the global standard. The United States plays by a different rule. It taxes based on citizenship. If you hold a U.S. passport, the IRS considers your worldwide income taxable, your salary in Singapore, your rental flat in Lisbon, your freelance clients in Dubai. All of it reportable to Washington every single year, even if you haven't set foot in the country for decades. This rule is old. It goes back to the Civil War, when Congress wanted to stop wealthy men from fleeing the country to dodge wartime taxes. That was over 160 years ago. The war ended. The rule never did. Now you might think, fine, I'll just quietly not mention my foreign accounts. Here's why that stopped working. In 2010, America passed a law called FATCA. It forces foreign banks in almost every country to report their American customers directly to the IRS. Your bank in London, Mumbai, or Tokyo is already sending your account details to the United States. You don't report your accounts. Your bank does it for you. And there's a second tripwire called the FBAR. If the combined balance of your foreign accounts crosses just $10,000 at any moment in the year, you must file a separate disclosure. Miss it, even by accident, and penalties can start in the 5 figures per year. But the most heartbreaking cases are the so-called accidental Americans. Born in the U.S. while their parents were studying there, left as babies, grew up entirely in another country. Decades later, a letter arrives. Their bank has flagged their American birthplace, and suddenly, a person who has never worked a single day in America owes years of U.S. tax paperwork. Let's be precise about the damage. For most Americans abroad, the problem is not usually double payment on salary. There are relief tools, and we'll get to them. The real cost comes in 3 other forms. First, complexity. A U.S. expat return routinely runs 40 pages or more. Specialist accountants charge anywhere from $500 to several $1,000s every year just to tell many filers they owe nothing. Second, penalties. The fines for missing an information form are often worse than any tax owed. Forgetting to report a foreign account, a foreign company, or even certain foreign mutual funds can each trigger 4- and 5-figure penalties independent of your income. Third, exclusion. Many foreign banks and investment platforms look at the FATCA paperwork an American customer brings and simply say no. Americans abroad get refused mortgages, brokerage accounts, even basic savings products. Not because they're risky, because their passport is expensive to service. So how do millions of Americans abroad survive this? 3 main tools. Tool 1. The Foreign Earned Income Exclusion. If you genuinely live and work abroad, you can exclude roughly $130,000 of salary from U.S. tax each year. You still file, you still report. But for most ordinary earners, the U.S. bill on wages drops to 0. Tool 2. The Foreign Tax Credit. Taxes you already paid to your new country count against your American bill, dollar for dollar. Live in a high-tax country like Germany or Australia, and this alone usually wipes out anything owed to the IRS. Tool 3. Tax treaties. The U.S. has agreements with dozens of countries that decide who gets to tax pensions, investments, and Social Security, and they stop the worst double taxation outcomes. Here's the catch that trips people up. None of these tools apply automatically. Every one of them must be claimed on a filed return on time. The relief is real, but the paperwork never ever goes away. Which brings us to the door marked Exit. There is exactly one way to permanently leave the U.S. tax system: renouncing citizenship itself. Thousands of Americans do it every year, and the government does not make it cheap or easy. The official fee is $2,350, among the highest renunciation fees in the world. You must appear in person at a consulate. You must generally prove 5 years of clean tax compliance before they let you go. And for the wealthy, there's a final toll booth. It's called the exit tax. If your net worth is around $2 million or more, the U.S. treats your departure as if you sold everything you own the day before leaving and taxes the imaginary gains. Leaving America's tax system, for some people, is the single most expensive transaction of their lives. That is how seriously this system takes the word forever. So if you're a U.S. citizen planning a move abroad, or you've already left, here's the 5-step checklist that protects you. Screenshot this. 1. Keep filing. Distance doesn't end the obligation, and silence is what triggers penalties. 2. Track the $10,000 line across all foreign accounts combined and file the FBAR the moment you cross it. 3. Claim your relief. Exclusion, credits, treaties, they only work if you put them on paper. 4. Check the calendar. Americans abroad get an automatic filing extension to June 15th. Use it. 5. Before any big move or any thought of renouncing, get one session with a cross-border tax professional. 1 hour of advice is cheaper than one penalty. So America taxes its citizens forever. But here's what almost nobody catches. For everyone else on the planet, the danger runs in the opposite direction. Dozens of countries have quiet rules that keep taxing you for years after you leave, if you break residence the wrong way. The UK can follow you, so can Spain, so can your home country. That story is the video on your screen right now. And if you thought today's trap was sneaky, this one catches people who did everything by the book. Watch it.